Gold in the first half of the year traded on average about $330 billion per day.
So what could the gold performance if the negative scenario for the macro economy occurs?
Absolutely, and you're right to think that way because in reality, consensus expectations not always materialize, actually rarely materialize. Diversifier, it also provides returns in a portfolio over time as we have seen historically, and it adds a lot of liquidity, therefore complementing many of the other traditional assets that investors have, especially Japanese investors.
皆さんこんにちは。ピクテジャパンの塚本です。本日はワールドゴールドカウンシルの米州地域およびリサーチ部門責任者のファン・カルロス・アルティガスさんをお招きして、今年後半の金価格の見通しについてお話をしていただきたいと思います。ファンさん、Thank you for joining us.
Thank you so much for having me.
Your latest report, the Gold Mid-Year Outlook 2025, has certainly captured our attention. It details an extraordinary first half of gold, which rose 26% in US dollar terms. To begin, could you unpack primary factors that propelled this remarkable performance?
Yeah, absolutely. Gold has had a very strong run, as you mentioned. And there have been a combination of factors behind it. One of them actually has been a fairly weak dollar. Actually, the dollar has had one of the worst starts for the year since 1973. So that created tailwinds for gold. In addition to that, there's a combination of geopolitical and geoeconomic tensions that have been on the rise this year, as well as relatively range-bound interest rates. So combined, all of these factors propelled investment demand, which was also reflected, for example, in high trading volumes. Gold in the first half of the year traded on average about $330 billion per day.
So you have analysis the gold price based on your gold return attribution model. Could you briefly explain what it is and what's the attribution of the first half year performance?
Absolutely. GRAM is a very useful tool that we have available on goldhub.com, which is our website, and it helps us attribute the different key drivers of gold to how gold is moving. And in particular, of the 26% return that gold had in the first half of the year, we estimate that about 16 percentage points were directly or indirectly linked to trade-related risks, in particular through opportunity cost, risk and uncertainty, and momentum, which collectively capture these 16%.
So now, looking forward the second half of this year, so what is your potential scenario you are looking for?
Absolutely. I think for us it's really important to help investors understand not only how gold performs normally, but how it may perform in different scenarios. So the way that we tend to start is by looking at consensus expectations of key macroeconomic variables such as inflation, interest rates, GDP, and other variables that tend to influence gold's performance. So if market expectations based on bond markets or economists' expectations of the economy will come true, so if they do come true, then we would expect gold prices to remain somewhat range-bound from here, maybe with some upside, potentially rising between 0 and 5% between now and the end of the year.
So the 0 to 5% from this, the latter half of this year still makes the total return of this year's gold return to something like more than 25%. So, but we're, as a strategist, I'm really focusing on the tail risk. So what could the gold performance if the negative scenario for the macro economy occurs?
Absolutely, and you're right to think that way because in reality, consensus expectations not always materialize, actually rarely materialize. So we also focus on these additional drivers that could move gold prices in different ways. In particular, we think that if geoeconomic and financial conditions deteriorate, if we have a worse stagflation environment or potentially a recession, or there's more concerns about the policies that the U.S. administration is establishing, that could create jitters in financial markets and push investment demand further. And in particular, one of the reasons why we think this can actually occur is because even though we have seen strong investment demand so far this year, we have not reached previous highs. So to put things into context, in the first half of the year, gold-backed ETFs have accumulated collectively about 400 tons. But in previous periods of risk, we have seen these types of instruments accumulate anywhere from 700 to more than 1,000 tons of gold. In this particular scenario, in the bull case scenario, we would expect gold prices to potentially increase between 10 and 15%.
So there is a lot of room for institutional investors or the hedge fund can increase their position in terms of that tail risk scenario. So what is the bear side for the gold scenario you're looking for?
Well, it's the opposite, the mirror opposite of what I just mentioned. If there's a resolution of risk, but not transient, not just for 30 days or 90 days, but a permanent resolution of risk, whether it is trade-related or geopolitical, then gold may give back some of the gains that it has acquired through risk premium, right? And that could create headwinds for gold. Now, given the current geopolitical environment, we do not necessarily think it is very likely, but it can occur, right? And in that case, gold may give up anywhere from 12 to 17% of the gains that it has had so far the year, finishing the year positively, but not as high as it is right now.
So today, thank you for your insightful analysis for the market. So do you have any final message to Japanese investors for why we should hold gold in their portfolio?
No, absolutely. Gold is a very useful diversifier. It also provides returns in a portfolio over time, as we have seen historically, and it adds a lot of liquidity, therefore complementing many of the other traditional assets that investors have, especially Japanese investors. And the other thing that is important to mention is that there are potential structural support factors for gold, including from new investors, institutional investors that are accessing the market, as well as from continued central bank demand.
Thank you for joining this program today.
Thank you so much for having me.